In the space of 24 hours, Bitcoin has come to within $400 of a new all-time high against the US dollar. We've seen it hit a new all-time high against the Aussie dollar, now at 105,000 Aussie dollars. It's gone to a new all-time high against the British pound, the euro, the Canadian dollar. This thing is unstoppable. But there's always a but. There's always a big but in the mix. There can be significant pullbacks when things get out of hand, when things get out of control, like these huge moves to the upside. So let's prepare in today's video, not taking anything away from this mega bull market to the upside. I want you guys to lock in as much profit as you possibly can. And I also want to show you some of the results from our traders and how they're doing it using particular systems in today's video as well. We've got plenty to cover with liquidations, with the S&P 500 continuing to put in new all-time highs, and of course, the macro cycle here, the 18.6-year cycle, which told us many years ago that this cycle was going to continue on while the masses were looking for corrections and recessions and looming doomsday. They have been absolutely destroyed. Don't get destroyed out there in the market. Hit the like and subscribe button right now. Let's do it. It's your home of macro cycle analysis. That's what we've talked about for years here now, covering Bitcoin, crypto, the stock markets, and of course, real estate, so you can get an inside perspective of these markets. Avoid the noise, cut it out. Let's go for 400,000 subscribers. Share this content with a friend today so that they can see how these markets work. All right, guys, let's kick it off with the Fear and Greed Index, which is now at its highest level that we have seen since the previous bull market. We're at 90 on the extreme, well, on the Fear and Greed, hitting extreme greed now. 90, way at the peak there. One thing to note here about the market sentiment is that things can get very frothy. They can remain frothy for considerable amount of time, considering how much energy and excitement there is. But what we want to note moving forward is if this excitement drops off like it did in the previous cycle, note this was over 10 to 12 months. I know it's a long period, but these are some of those earlier warning signs about the market. If that extreme excitement wears off while the price makes new highs. This was 65,000, this was 69,000. So the excitement was wearing off as the market pushed into new fresh highs. That can be an early warning sign, along with many other signs that you need to put together to let you know that maybe all of that excitement out in the market, or at least what they're spreading to us in the headlines, in the titles, and all sorts of things, maybe isn't stacking up to what is actually going on with the buyers and the sellers. Okay, so that's one piece of the equation. We'll continue to follow up here on the channel. Right now, we're at 90. This is the first time we've hit it, so I don't think there's any need to get too bearish about the entire market, but do note that when things get frothy, the pullbacks, even if they are small, 10, 5, 15, 20%, they will probably feel like the world is caving in. Remember what we saw with Bitcoin going back to the 28th of February, we ran up to 64,000, a pullback to 60,000, felt like the world was caving in. The same deal happened back at the ETF peak, 49K, pullback to 38.5K, world was caving in. And we were only at 30.5K several weeks earlier. And so the same thing can happen here as the market just continues to go vertical. This is essentially what the vertical market looks like. In terms of a vertical market and what goes on here, you can see that if you are trying to short these markets, these shorts are getting absolutely wrecked. In the last 24 hours, $250 million of shorts have been liquidated. So the main thing here is stay safe out in the markets. We do want to see a lot of the liquidations get removed from the markets so that we can hopefully reset all of that ridiculous leverage that goes into the markets. Now, if a lot of that leverage has left, then you can start to form another base. And from that base, the idea is that we can push to new fresh highs. So it's not I guess, if you're not trading like this and getting destroyed, trying to short the market on the way up, doubling down as that market creeps up, taking out small short positions, if you're not doing that, then you have nothing to worry about. You're taking your spot positions and you're just following the market, removing away from the noise. You've got nothing to worry about. But this is what we do want to see. We want to see all of this nonsense get stripped from the markets. As you can see in the last 4 hours, there was a lot more shorts that got wrecked than the longs as well, because they just keep trying to short this market on the way up. Now, from that shorts getting wrecked to our traders making huge profits here, well done to you guys here. GG. We've also got Ricardo doing more ridiculous leverage. I'm not suggesting that at all, but congratulations to you guys. So if you are wanting to join TIA Premium, there is a link to this in the top of the video description. You got TIA Premium there. Subscribe to the TIA report. You'll get an automated email, $100 off for you guys there subscribing to that report now. And you can basically follow along to create your own plans to trade in these easier market conditions. When you have very clear moves to the upside like we've seen with Bitcoin, it is far easier to trade. Guys are making very good profits, but they've learned through the tough times as well, as is shown here in our crypto trading for cash flow series, where you can see we've got record profits from these particular trading strategies. More on that in future videos, but if you want to get on board with that now, link is in the top of the video description. All right, guys, let's look at the Google Trends as well. As over the last couple of days, we've seen the trending word of Bitcoin drop off just a little bit. So we definitely want to see a bottom come into the trending words so that we can start to form another base and then hopefully take out the previous high. The high that we got to was very similar to what happened at the peak of the ETF. And of course, this is a few days old now. We're at the 5th, probably around the 4th of March, and the data here is for the 1st. So I'd love to see what happens over the next few days, whether we do get this climb up with a lot more search volume coming through for BTC. You'd probably expect the push to continue on if that is the case. But if you start to see this thing drop off, then that might also be an early warning sign for at least a shorter term pullback, just looking at the daily search volume for BTC. But if we extend this out to 12 months and potentially even 5 years, you'll see that it's still on the uptrend for the macro picture here over a longer period of time. But day to day, that could swing the price of BTC as people are searching, selling, buying, all that sort of stuff going on here. So over the 12 months, pricing and the Google Trends is looking relatively good. Over the last 5 years, there is also starting to see a tick up, and the volume here is at 44 compared to the ETF peak at 42. So it's a good thing. We're starting to see more of that volume come through. Not even the masses of retailer here like we saw at the peaks in late 2020 and the first half of 2021. We've still got a fair way to go to get to that point, and also back to the same sort of search volume that we saw on the capitulation down into the June low. So basically you've got the lunar collapse in May, the DeFi collapse in June, and then of course the bottom from the FTX collapse. So we haven't even reached those sorts of search volumes yet, when basically everyone was losing their shirt on the way down, and also when everyone was getting super excited at those extreme peaks. Now we've got some stuff to cover on the S&P 500, but I do want to get across to Bitcoin and some of those warnings as the market continues to pump very, very hard, like it did last month, 43%. Now, what I've got here is the Gann swing indicator on top of the monthly chart here for BTC. And what we're looking out for are extensions to the upside in terms of months. How many months in a row using the Gann swing indicator, not looking at reds and greens. What you want to identify here are higher highs and higher lows on the monthly chart. That's it. We don't need to know about reds and greens within the mix. It's just higher highs, higher lows, because you can get a lower close in the month. You could probably see one through here. So you got a lower close, but it didn't break the low and it put in a new high for the month. So that there was still strength showing in the market, which came through in the following month and pushed that price higher. So we're into our 6th month of higher highs and higher lows. It's not impossible, but it's probably unlikely that we would see a low below 42,000, considering that was last month's bottom. And in terms of the percentage move, if this was to be the top, down to last month's low, that would be a 38% correction. So we haven't seen one of those yet. But looking at the previous cycles, looking at the total months to the upside, and we want to pick out streaks to the upside that are 5, 6, 7 or more months. So we've got the move out of the 2015 low to the 2017 peak. So the big bull market, the bull market that is so far most representative of what's going on at the moment. However, we're obviously seeing a potential break to a new all-time high earlier than what happened in this particular cycle. But the main thing here is we want to look at corrections after such long winning streaks. What potentially could we expect? Because as they continue up, getting further and further away from any other previous correction, that's when you can expect bigger downside. Now, there was 7 months up before we got that first correction. It was a very short correction. However, it was 34%. Now, I've included this one back here as well, which is about 2 months of 40%, because on some charts, this low didn't come in right here. It's only $4 lower than the previous low. And in this case, that was 10 months to the upside. So 10 months to the upside underneath the previous all-time high, mind you, was still a 40% correction. 7 months up, 34% correction. We'll come back to these bear market dips from the peak. We had 6 months up in 2019. That led to a 53% correction. 5 months up out of the COVID low, which was a very significant correction, which probably took out a lot of sellers in the market just on that particular dip, which is potentially why this dip was not anywhere near as severe as a 53 or even this move here, which was another 63% correction there. So you had 21% after this 5-month move to the upside. Then you had another 56% correction from the April top down to the June low. So 56% correction, market went on again for another 5 months to the upside. From that peak, which started the bear market, you had another 52% correction. So we haven't seen anything in the vicinity of greater than 22% of a correction so far. Doesn't mean that it's impossible, of course not. We want to be on the lookout for wherever this top comes in, depending on how hard and fast the move goes vertical, could determine where this correction lies. So we just want to see the percentages. We've got a rough idea here of 34 to call it 56%. So somewhere in the middle there, if you looked at an average, about 45, 46% correction, depending on where this top comes in. It doesn't seem like we would get to a 45 or a 46% correction, as that'll put us back down to 37%. But you wouldn't want to see the price close underneath those levels because it would be underneath the 50%. That's providing if this is the top. Now, we don't have the top. Once the top is confirmed with a few days to the downside, and maybe see a daily swing break or a weekly swing break, that might give us a little more information to start measuring from that top. And then we can take out the measuring tools and have a look to how far down the average move might take from that peak. I would say provided it's over this particular period here, $48,000 to $42,000, provided the price remained above that level, then that would all be considered a healthy correction, which would then give us another opportunity to load up again. You'd probably be able to get into the cryptos and load up on those. You would probably see the BTC values also drop off, which would also be another significant time to be loading up on your stronger altcoins before they take off for that next stage of the cycle. This is how we'll use the tools to identify where that correction could come in. But I have to stress, there is still no confirmation of a top in. I'm not saying there is a top. We don't have a correction yet. We've got nothing of the sort. You can see the price here is still at $68,000. Looks like it wants to try and push to a new all-time high probably in the next 24 hours. Then you'll probably see the bears come in to say, well, we've got a double top. This market just has to collapse from that point. Told you it's bearish, yada, yada. If that doesn't happen and it squeezes straight through the all-time high, comes back and sits on top, maybe it's a short-term thing here, that's going to be even more bullish. Things are going to get pretty damn wild from that point. Now, before we get onto ETH and the total market caps, in terms of the traditional markets, look at this overall cycle. It doesn't seem like things are getting ready to cool off at all. The positive January and February is a good thing for 2024. Once these months are up, essentially the majority of the time you see the rest of the year up as well for the traditional markets here, for the S&P 500. So overnight, we saw a new all-time high for the S&P 500. We're at 5150. The rest of the markets don't seem like they're slowing down either. The NASDAQ also put in another fresh high by a few points, having a bit of pullback here, and you can see the price ranges getting a little bit tighter as the market wears on. But of course, there hasn't been any other sign to say that they have to collapse. It's basically been what we've talked about with these moves to the upside, with these grinding bull markets, that even when you do see the corrections, they're not that significant compared to what most are waiting for. I think most wait for something like this, 20+%, maybe a 40%, maybe a COVID style collapse, which looks like absolutely nothing now on the chart. This was basically the end of the world. And when you look at where we currently sit, it's absolutely dwarfed of price range and percentages now, considering where we sit at 18,000, going back all the way down to 6,800. And so they wait for these big moves. And typically, as we pointed out, in these bull markets, as they continue higher, they typically grind out, and it really just annoys a lot of people because there's just no real safe entry point. They can't get into the market because there's been no significant correction. Now, there's a great quote right here. It's gone on too far, too fast is code for I missed the move. I really love this one because that's essentially what it feels like in these bull markets as they continue to climb higher over the course of the last stage of the 18.6-year cycle. This is the winner's curse phase. The final phase, the winner's curse phase. This is where everyone seems like they're a genius. They're a god at trading. They're making money. Nothing can go wrong. This is the point where you have to start to think, I need to start taking profits. It can go on longer than we expect, but these times don't come around forever. They don't last forever. They don't come around all the time. And eventually they're met with a very significant correction here, a pretty long correction, because we have not seen a long correction since basically 2009 for the stock market, and the bottom there at 2011, 2012 for the real estate and economic cycle. So eventually these longer periods do come about. Now this is for the US, but the majority of markets follow suit, maybe not to the exact timing. You will see, like we saw with the UK, they were still dropping off on real estate prices while the US was starting to go up, Aussie was going up, and now the UK's turned around and they're pushing higher again, getting back to fresh new all-time real estate prices. So it's important to note your particular area, but basically things move together. Think of altcoins. Memes are pumping now. A couple of weeks ago, it was AI. A couple of weeks before that, you had L1s, L2s. A couple of weeks before that, it was something else. Everything is moving up, but you get a pump from the first one, they pull back while the next thing's pumping, and then they pull back, and the next thing's pumping, and they pull back. That's what's happening at the end of this cycle. When that occurs across all of the markets, is why I'm calling this the everything bubble. When that occurs across everything, you can bet that this pullback here, this cyclical peak and then crash, is not going to be very good for the majority of us. We don't need to get too worried about that right now. We still have a bit of time in that. But I just want to remind ourselves that although these times seem like they'll never go down and Bitcoin is here to save the day and push to new all-time highs, it's probably important to look at some of that profit taking along the way, not all at once, along the way, so that you can remain safe when these times do come. It's not a matter of if they come, it will come. So going back to this quote here, too far, too fast is code for I missed the move. That's unfortunately the position for many people. Looking at the S&P 500 returns following a 20% gain in 4 months. So what do we got? November, December, January, February. Gains in 4 months. What happens after that point? Well, short term, 1 month, 3 months don't look so great. You've got a few reds in here, but still a few greens. It's a short term outlook, of course. When you go through to the 6 and the 12 months later, a lot of greens, pretty damn high returns as well, above 20%, in the teens here, a couple of 30s down there. It's some pretty big returns. Pretty important point here that some of these came after significant pullbacks. That's what we've seen in 2022, while the masses were preparing for the next inevitable looming recession and collapse. We had this big pullback, and almost always from very significant pullbacks, you see the market rally out of that pretty damn hard. So it's really important. This is a longer term thing. Hopefully you can use it. When you see these pullbacks, it's important to get prepared for the possibilities of the move to the upside. Look at the COVID collapse. Big pullback. Markets are getting ready to pump to the upside. You got the 2009 bottom. You got a pretty significant pullback here that lasted more than 12 months. And then the market gets ready just to scream away from that point. So it's important to get not too bearish for too long, but there are periods where the market is going to be into that bearish camp. But essentially, when you see those pullbacks, it's probably getting ready to spring back the other way. That's what we've seen here. That's what we're coming through at this end stage of the 18.6-year cycle into the winner's curse phase, which leads us into altcoins where we all think we are trading gods and extreme degenerates. As a degenerate myself, this is the reminder to hit the subscribe button, share it with a friend, show them what is going on in these markets, and hopefully you can have a lovely conversation with them about what is actually happening. Now, in yesterday's video, I talked about the Bitcoin warning, the all-time high breakout could spell disaster for crypto. And in terms of the prices against USD value, they continue up. That's fine. The big one here, though, is the altcoins dropping against their BTC value. I'm not going to spend a ton of time on this because I know a lot of people maybe don't get it. They might want to get it, but sometimes they just don't care and they just want to see their USD go up. But in terms of your risk, if you are risking your money, you might as well take the lowest risk possible, which is typically BTC, and then wait for a bottom to form on these altcoins. You can see the ones that had pumped up. If you got in early enough months ago, then you got pretty big gains against Bitcoin while Bitcoin was going up, which is even bigger gains against the US dollar because, of course, Bitcoin's going up against USD. Your altcoin is going up against Bitcoin, which is also going up against USD, which means you're getting even bigger returns. They're the 36x, 37x, 100x returns, right? But if they're going down against BTC, then you're basically just giving all of those gains back and you could take some profits into Bitcoin, which is potentially why Bitcoin is also still going up, why it's still going to the upside, because you're seeing these altcoins bleed out against their BTC values. Maybe people are selling them off and they're just maintaining their USD value and they're selling it back into BTC. You can see Link has been on the decline here. You can see Render has peaked and has been on the decline. You can see Solana has been on the decline since December. So it has put in a new fresh USD high, but it's been fading against Bitcoin, which means you can just keep your money in Bitcoin and make the same gains, if not more, during this period because it's going down against its BTC value. That means that you're losing value here faster than what Bitcoin is making its value. And I'd say if it starts to break down this level here, roughly around 178,000, 180,000, then this might be an opportunity to get into some altcoins. All we've done here is look at the support and resistance levels, and that's what I would suggest you do with your altcoins. Look at Sui. Sui was a big name here, and it's continued down and it's basically head straight back down into this zone here of 2,000 Satoshis. So again, could be another good DCA area for when those altcoins take off again. This does not mean the altcoins will stop and basically that's the bottom. You got to be aware of that as well. But if we're looking for those opportunities, don't you want to be buying when the market is looking to bottom? So you can wait for a bottom as opposed to trying to buy on the massive, massive pumps here. Probably not a bad strategy if you're interested in getting into some of these altcoins. Check out TIA. TIA was one of the big ones that everyone was talking about on its way up. And now we've seen it break down past that 50% level. Let's look back towards some of those support and resistance zones, somewhere around 20,000, 16,000 Satoshis into this zone. Watch for a bottom to form and maybe come out of that area. This could go for many weeks or many months, but that is the opportunity in these altcoins for when things flip. As we looked at in yesterday's video, looking at how Bitcoin could put in a top and then have a pullback, but still go on to put in a new top. Just looking at the differences here between the left and the right-hand side of a 4-year cycle, measuring from the lows to the lows, not the halving coming up here, but measuring lows to lows. Then there is still the possibility that we put in a top, have a healthy pullback, which is what I mentioned at the start of the video when we're looking at any sort of price ranges for a healthy pullback, looking at that strength and weakness. That could still be the case, and the market winds up again for another pump later in this cycle. It's still a possibility. It's not ruled out yet. The timing where that would be ruled out, where that's invalidated, would be a breakdown of the 50%, a breakdown of the monthly swing bottoms as what's happened in each previous cycle. So giving you that macro signal that this thing is over, the show's over, and we're probably going to see lower prices. That would be the time that game over. It was an early pump. Everything's shot. Time to move on into something else. But that has not occurred. Stay with the trend, stay with the market. We may get another shot at this altcoin season, as you can see from these altcoin charts where they basically continue to drop off against their BTC value. As for ETH, it has continued to climb here. It's still holding relatively well against BTC value as well, still just sitting above the 5.2 million Satoshis. It hasn't broken down yet. So we're going to keep an eye on that just to see whether that is the final flush out. It's held up much, much better than the previous cycles where it basically got absolutely slaughtered. This time around, a little bit healthier. We're a lot healthier and a lot more strong. Keep a watch out here. like and subscribe. Links in the top of the video description for TIA. And shout out to our channel sponsors, SwiftX for the Aussies, for your on-ramp there, and of course, Bybit and BitGet. Thanks again for joining us here on the channel. We'll continue to update you guys. It's been a fantastic day. Hopefully we get to this all-time high today. Peace, and I'll see you at the next one. Cheers.